All right. Hello, everyone. Welcome to episode number 89 of Going Live with Good Soil. We do this on our YouTube channel, our Good Soil Investment YouTube channel, every week at this time. And that's where most of our audience is. Welcome, everyone. And we're also on Twitter Spaces here for those of you that find it more convenient to just listen on Twitter Spaces. Hopefully that helps. Matt and I, normal format, just to go over anyone new, we talk about macro market, the latest big news macro market wise, banking stuff will be the topic today probably, and then we talk about Tesla and Elon and Twitter and a couple other industries or spaces we follow, like Roblox's gaming metaverse type space and space industry and if there's anything on Lemonade and SureTech, that's another stock we talk about and we follow. And then we go into Q&A. So it's mostly Tesla. We try to focus on that because that's most of our net worth and our funds exposure, and most people follow us for that. So we try to focus on that. So let's kick things off, though, first with the macro market stuff, Matt. A lot to talk about, as usual, most of the last several weeks. The banking system seems to be much more fragile than everyone realized. And we're seeing this now with these interest rates ticking up and kind of cracking the balance sheets, first of Silicon Valley Bank and Signature Bank and Credit Suisse more recently. And I mean, there's going to be First Republic. It's cracking the balance sheets partly because the interest rates are going up, and then also because there's a panic of these like bank runs. I'm not sure if that's the case for Credit Suisse. Credit Suisse might have been a little bit different, but for the U.S. regional banks, it appears that these kind of mini bank runs of people taking their deposits out and bringing them to the big, four banks that are quote unquote too big to fail, has caused some of these balance sheets to crack. So the question is this going to keep happening? Is the Fed, FDIC, are they putting some policy or something in place to guarantee all the deposits going forward above the standard $250,000 limit that they've always had? That seems to be kind of what's up in the air right now. So tomorrow is a big decision for the Fed. We'll talk about that. But what's your thoughts on the banking fragility right now of the U.S. banking system?
Yeah, first of all, it's just kind of shocking how quickly this story has developed. 2 weeks ago, this was really not on anybody's radar. And then, even like 2 weeks ago, Tuesday, we were talking and Jerome Powell was testifying before Congress that he didn't, on Wednesday, right before Silicon Valley Bank imploded, that he didn't see any fragility in the banking system at all. And then, the next weekend there were 3 bank failures, and Credit Suisse was taken over by UBS just this past week. First Republic, like you said, is looking very kind of rickety, and then there's been runs of some degree or another at a lot of banks, and kind of concentrating on the larger banks, like you said, and going into the Schwabs and the Interactive Brokers of the world, presumably just where, the assets are actually yours and they're not being, loaned out. So, it's very surprising just how quickly this story has unwound. I'm definitely surprised at just how quickly it's happened, but at the same time, it's not that surprising, given how quickly and aggressively the Fed raised rates, that there would be some collateral damage. So it almost, Powell was actually saying about 6 months ago that he'd rather kind of like break the economy because they've got the tools to fix it. And it seems like we're at that point now where they very clearly are kind of breaking the banking system. In terms of the FDIC and the deposits, there was already this kind of implicit bailout guarantee. Look at what happened with Silicon Valley. Even all the depositors that were over 250,000 were essentially made whole. So the Fed has, well, not the Fed, but the government has always kind of had this policy where they're not going to let the depositors take the fall for, overly risky behavior of the banks. So whether the U.S. government kind of formalizes that and, raises the FDIC insurance to, I don't know, many millions or, some unlimited amount, it's probably good policy. Otherwise you're just going to have kind of continued concentration. But at the same time, if they do that, then like that very much incentivizes, the CEOs at these banks to just take the riskiest behavior possible. So it's not necessarily a good thing.
Yeah. It's I feel like this definitely, the timing of this has caught everyone off guard. I mean, it seems, when you look back, it seems like, all right, this is inevitably going to happen as interest rates go up. It doesn't surprise us in that way. But I think the timing is a bit surprising on the eve of this next Fed decision, which they announced tomorrow, and Powell has this press conference tomorrow. And as soon as this started happening, last 2 weeks ago or whatever, as soon as we caught wind of Silicon Valley Bank going down and such, I kind of thought that it just means, to me, the Fed is not going to raise rates. They were pricing it was being priced in like greater than 50% chance they'd raise it 50 basis points up until 2 weeks ago, and now it's like 70% chance it's going to be 25 basis points, and like 30 or 35% chance, something like that, that'll be pause. But it has slowly kind of inched back, to that kind of, from the 50 to 25%. Even after Silicon Valley first erupted, like the futures did not price in the chances of a pause like above like 5 or 10%. But now the futures markets are kind of pricing in the chances of a pause being more and more significant. So right now it's around, I think, 20 or 30%, maybe a little more now. It's kind of creeping up, and I think they're going to pause. I don't see why they wouldn't pause. I mean, tomorrow, if I'm Powell, if I'm talking to the Fed, all the other governors today about it and trying to make a decision, what's the positive of raising hikes just 25 basis points? What's the positive versus the risk of that, right? I mean, the positive, you send a message that we're confident the banking system can handle these higher rates. Okay, it's like a little, it's not really going to change inflation much, 25 basis points. I mean, the message, I guess, but the risk is, if any more bank collapse is happening, people are not surprised. The timing is surprising, but now the timing could happen anytime. We're realizing any time now there could be something, some kind of domino effect that causes like a balance sheet to get off crazy, and the Fed in some big bank has a major crisis suddenly we didn't realize was about to happen. Well, guess what? If there's any more banking issues, then who's the scapegoat? The scapegoat is going to be Powell and the Fed. And if they pause, they're not as likely going to be the scapegoat immediately. They'll be the scapegoat long term. Like, the Fed should never have raised rates so much. But if the Fed had raised 25 basis points, I think the Fed puts themselves as a prime target, bullseye target, to be the scapegoat of the next banking collapse. And maybe there is not another banking collapse. Maybe there's no more banks that collapse. Possible. But I don't think Powell and the Fed want to put their careers and their legacy on the line just betting that there's not going to be any more bank collapses. I mean, what are your thoughts, Matt?
Yeah, so I think I'm thinking it's a little bit more probable that they'll do 25 basis points. I think if the last couple CPI prints had been more muted, then they'd kind of have all the evidence they need to make this pivot. But they kind of have been signaling continued rate increases, higher than people think for longer than people expect. It's been the type of language that they've been using lately. And, the only thing that's really changed since Powell's, last testimony before both houses of Congress was, it was this banking collapse. And that is a very serious issue. So it's not like that's a minor change necessarily. But I think if I'm thinking about it from Powell's shoes, I think he doesn't necessarily believe that, they've kind of put the cap on inflation. I think he's wrong about that. I think the kind of lagging indicators that are baked into there, like we talked about with owner's equivalent rent, there's a lot of reasons that there's noise in there. But like, to me, it is unjustifiable to continue to raise rates, but I still kind of think that they will. The other thing, back to the banking system, that what really shocked me is there's this Fed discount window, which is essentially like an emergency lending mechanism that banks can use to kind of get short-term liquidity from the Federal Reserve, to handle bank runs and that sort of thing. And that, was just kind of like ticking along at very minor levels. And then just in the course of the past 2 weeks, it shot up to all-time highs, eclipsing the amount of borrowing. I think it's over $150 billion of short-term borrowing from this Fed discount window, which is higher than the peak of the financial crisis in 2008. So like, there are a lot of very serious signs right now that the banking system is in danger. And I think further rate increases are, just fuel to like, you've already got a fire. It's not just like you're putting like gasoline on wood, and like hoping it doesn't erupt. Like the house is already burning, I think. And the question is like, will the Fed avoid putting more gasoline on it? And I kind of think that they're going to make a mistake and actually go with 25 basis points, but maybe change their language to be a bit more dovish.
Yeah, I mean, that's what the market thinks right now. The market is pricing in a 25 basis point increase tomorrow. But the market is, there's a lot of money in the line there. I think it'll be flat, and like Elon said, they should really drop interest rates by 50 basis points at least. And I believe that too. They're really the fool in the shower at this point. That metaphor we talked about last week. So it's the language for one thing. We know definitely the language of their statement is going to have to change drastically, right? The imminent threat, risk, or whatever language will have to be dropped. There is imminent risk possible, all that stuff. So there's certainly going to be a whole lot of new language, I think, in the statement they put forth. So the market's going to have a lot of digestion. The latest I've heard, people say, and I think the Bank Policy Institute, the Bank Policy Institute is this firm, like, not claim they claim to be nonpartisan of like talking about Fed policy, but they basically are saying like it's either going to be a 25 basis point increase that sounds dovish with the language, or a pause that sounds very hawkish with the language. That's kind of like the two options apparently.
Yeah, that's what Gary Black was kind of saying, and he's in the 25 basis points with
I think that's what institutional
language.
The institutional Wall Street sort of saying right now. It seems to be the latest. So
can you imagine what if they actually followed Elon's advice and they cut by 50 basis points? Like, would people just lose their minds at that point? Like, what do you think would happen? I know that's
first of all, that's not. I would put the odds of that at like 5% or less.
Less than 1% in my mind, but would be wild.
So I would think that the market would be really caught off guard, and it should rally, but it wouldn't surprise me if at first it's like a V thing, that like the first day it goes down 5% because it thinks like, oh, the Fed is really worried about, and the headlines, the narrative is the Fed is really worried about, the direction of the economy and how fragile the system is. So the market tanked or something. And then the market takes off after that. Because sometimes when there's uncertainty, when there's something unexpected and uncertain, like I feel like that's when there's a vacuum of liquidity, and the selling is more easily triggered in those than buying, because people want a little more certainty before they're comfortable buying. And so there's just going to be an imbalance of buyers and sellers, I think, and something really uncertain happens like that. And markets typically seem to just go down, at least initially, and then sometimes they bounce right back up once people feel a little more, once they feel like they've digested what's going on, really. That's just my intuition saying that. Gut.
Yeah, so, I mean, I think it's going to be incredibly volatile no matter what happens. And we've seen enough of these situations where what seems like good news, like maybe it rallies like 2% intraday and then just plummets back down, at open the next morning. So trying to get the short term right on the very short term right, anyways, on this stuff is very difficult, because you can be right on the call but wrong on the direction of the market reaction.
Yeah, absolutely. And what's interesting is, I mean, you have the All In podcast. We talk about those guys a lot. We listen to them. We feel like there's high signal to noise ratio on that podcast with all things economic, macroeconomic or just economy related, especially macro news and stuff. So David Sachs, who's, we're big fans of, he's been really harping on this, and so is Elon. Everyone's been very vocal publicly, but another person that we like to follow, or I like to follow, even though he's threatened to ban me or block me once or twice, is
but you keep going back to the well with him. It's great.
I go back to the well. Yeah. Nassim Taleb, he has not blocked me. It's opposite of Lex Friedman, for example, who has blocked me and never said he would block, and there's another guy I can't remember who blocked me like that recently. So there's a couple like, people I'm suspicious of, but Taleb at least, threatens to block me, but he has, he never does, because he's like, all right, I'm not, unless you really go crazy, I'm not going to block you, but I'm just going to threaten you. So Taleb, he's been really on the case, calling David Sachs a techno water melon, a technocrat watermelon or something like that, is calling him, like, really making fun of him, saying like, you basically saying like venture capitalist people like David Sachs and all in podcast people, and all these people being so vocal on social media, they're like venture capital, kingmakers and such. They are upset because they've been in this zero interest rate environment so long, where cash is basically free, that they don't really understand that, cash flows. He's saying, like, they don't understand that businesses cannot just be given free money, that they have to actually make money. And this is the environment, the world we're going back to. And it's just a rude awakening for them that, that 10-year period of zero interest rates is sort of over now. That's sort of the gist, I would say, of what he's saying. I mean, it's a perspective. It's a valid perspective to consider, but I think there's got to be some balance. He's basically saying like, and then David Sachs comes back. He's like, well, all these other companies would never have survived, like Google and this company and that company, Apple, all these companies wouldn't survive if they never got venture capital. But that's not what he's necessarily saying. I think he's just, then they talk about survivorship bias and all this. I think he's just saying like, it was too easy the last 10 years to be a venture, capital success. Like, you could back 100 companies that all fail and have one company that succeeds. And yeah, it was okay, and that's not supposed to be like that.
Yeah. Well, in the zero interest rate environment, I think you don't even necessarily need to, if you're early enough stage, you don't need to get to the point of actually backing a successful company in order to do well for your fund. You just have to be able to sell it at a higher, valuation. And so, like, you might just be, pushing the risk up the chain. So,
Yeah.
company grows revenue and can take advantage of the zero interest rate environment to, fund a lot of kind of aggressive capex that makes like the top line numbers look good, that makes ARR look good. And then they can, get another round of funding. So that they, like, these companies may never even like be cash flow positive, but they continue to get these like higher and higher valuation rounds, which makes the VC's performance look good, because they, bought low and kind of, sold the company to another, higher up, kind of investor, or like IPO'd, and then the company eventually, failed after IPO. So I think Taleb's view is like that whole environment was just a big misallocation of capital, because
the bubble.
The kind of hurdle rate for these companies was way too low, and I think that's a valid criticism. But I certainly agree with Sachs' point as well, that like, as a kind of we very much believe that technology is really driving the vast majority of kind of economic improvement right now. I think that's actually never been more true. And so you can't, like, it's not fair in my mind to criticize the VCs for like the monetary policy of the Fed. So it's like, maybe he's right that like they should have been a little bit more focused on fundamentals, but I would say that's something that Sachs has been preaching, like, even in the middle of the bubble. Like Chamath is probably a little bit more guilty, I think, of pumping some questionable companies than Sachs is, at least in my point of view.
Yeah. No, I agree. There's two sides to the coin here, and it's interesting. Just we see one side from David Sachs and all in podcasts, but then you have to also see the side that Taleb brings to the table, and they both bring valid points. I don't think one of them is more right than the other. They've, the venture capital industry has been, caught like a deer in headlights with this interest rate, the domino effect of these interest rate increases. And so, if you're in the venture capital industry, you're sort of screwed somewhat right now in terms of valuations. All your whole portfolio of companies are big trouble in terms of their valuations. So, I guess if you're like, maybe if you're like a, high net worth family office manager or something, and you can be nimble and dive in and out of different things, and you can be a venture capital investor at certain times, but you can be an investor in fixed income or value growth stocks other times, maybe then you should know better at a certain point, like, oh, I'm not going to go in venture capital anymore. I'm going to stick to, utilities or something, of stocks or something. I don't know, but that's hard too. You're a specialist in one industry and you focus on the industry, and the whole industry became a bubble with those zero interest rates. And, there's good that comes out of it too. Tesla, you could argue, for example, that was Tesla really had to tap the public markets for most of its funding, though. It wasn't really a good example, but there's companies like Uber, I guess, and Uber's a good service. It like displaced the terrible, inefficient taxi industry and to a large degree. But, you know, there's companies that were venture backed for a long time at crazy valuations that are a good service, and they've made it to be public and they're somewhat profitable now or something. So, you know, there's arguments both ways, I guess.
Yeah, you know, I just my view is that the Fed shouldn't be in the business of kind of trying to guess what the right interest rate is. I mean, because if you look at their track record over the long term, they botched it, you know, pretty consistently. You know, they
Yeah.
tend to be, you know, significantly lagging in terms of what was needed. I mean, I think everybody would agree now that, you know, 15 years essentially of ZERP was, well, maybe 14, 13 was you know, way too long. You know, but like it's so hard to get off that drug, you know, once
Yeah.
you're on it.
Yeah.
And in fact, Jerome Powell was kind of advocating a quick, you know, getting off of it 10 years ago. And now that he's chairman, you know, in the COVID crash and everything like that, he kind of signed right up for it too. So it's, you
Yeah.
know, it's hard to, you know, be the voice of reason like Taleb is trying to be, you know, after the
Yeah.
fact, obviously, but, you know, to say, you know, we really need to focus on cash flows. And, you know, but if you have call it a 3 or 4% risk-free rate, and, you know, you
Yeah.
kind of do your normal cash flow analysis from that instead of zero, you're going to get a lot different incentives for behavior in the economy. So, you know, I think there's a middle ground. You know, 5% is too high, 0% is too low, and, you know, 3% is
Yeah.
probably just about right. But don't monkey with it over time.
Yeah. Yeah. So another thing that's kind of controversial that we talk about sometimes that, you know, Taleb has commented on controversially is Bitcoin. You know, he thinks it's worthless. It's a scheme. You know, a while back, he used to be a proponent of it. And then like 2 years ago or something, he came out, he reversed his position, and he thinks it's a pyramid scheme, and it should be worthless over time, Bitcoin and such. And so, it's just good to hear his argument on that, you know, whereas most of the people we follow, whether it's Kathy Wood or venture capital people, they're all like so pro Bitcoin and so pro, you know, cryptocurrencies and such. You know, we talk about Bitcoin from time to time. It's had a nice run the last few weeks. It's come close to 30,000. I think it's like 27 something now, but it was eight. It feels like it was just like 16,000 just like recently. And now it's up to
Yeah,
like 27,000. So it's coming up, and I think
Balaji. Yeah,
Balaji, I forget his name, but I've heard him on several podcasts. He talks very eloquently. He's very hypnotizing the way he talks, and he's very smart. I could tell he's smarter than me. You know, he's very eloquent is the way I would describe it. Like he can speak very clearly and communicate very concisely, and makes a lot of sense. But there are some holes I've found to him talking in the past, and he's very bullish, I know, on like Bitcoin and Ethereum. What was the latest thing though? He has some kind of crazy take or bet he's trying to do on Bitcoin now. Like in
yeah.
the next 90 days, he
So
thinks Bitcoin will get to $1 million of Bitcoin or something. Is that right?
that's exactly right. So he essentially took a bet that he will transfer $1 million in 90 days. This was maybe a week ago for Bitcoin. I forget who his counterparty was, but you know, essentially he's saying that, you know, the kind of weakness in the bank system that we were talking about at the start of the show is like just the beginning, and we're kind of on this you know, impending like crash course where the entire, you know, kind of financial system of the world, and the U.S. especially, is going to collapse, and he thinks very imminently. You know, and so the kind of broad strokes of his outline are actually things that I've agreed with for like over a decade. So, you know, he's talking about
Hmm.
the kind of excessive, you know, deficit spending that's just fueled by printing money, and how that's going to eventually lead to deflation of the dollar against, you know, other
Eventually, but he
currencies.
thinks that eventually be in the next 90 days.
Yeah, so that's, you know, that's exactly my kind of criticism. Like all these like longer term trends. Like, I'm not a Bitcoin maximalist, so I'm not going to say I defend every, you know, long part of his thesis, but I can
Hmm.
tell you from like for the last 15 years, I've been very concerned about, you know, the dollar as like a store of value, given how much we're, you know, spending more than we're bringing in, and we've got these you know, long-term liabilities of like, you know, unfunded Medicare and Social Security liabilities on top of our, you know, current deficits, which are ginormous. And, you know, we've got almost 2 years of GDP outstanding as debt. And so when you're raising the interest rates in this environment, like the interest expense just becomes a huge part of the economy overall. So, I completely agree that like the current system is unsustainable, and will probably the most likely way out of this for the United States, I think, is for, printing of dollars to kind of repay debts, which leads to, inflation and for devaluation of the dollar. So like I kind of agree with him in broad strokes, but yeah, he's essentially saying that this is going to happen in 90 days. And he's done a little bit of like technical analysis, but then he's also, I listened to his podcast and where he was kind of laying out his outline. And there are just a lot of things that I think are highly unlikely to happen at anything like the kind of 90-day timeline that he laid out. So he was essentially saying that, more of these, governments around the world, like the Venezuelas and, Egypt and a couple more of the countries that have been having issues lately are going to move to Bitcoin as like a national currency. And then he thinks that there's going to be more companies like in the S&P 500 that start allocating, Bitcoin, and then
all 90 days. Yeah, that can't happen.
Yeah, and he's essentially saying that like the dollar deflation cycle is going to start, and then or inflation cycle. So then the more the dollar devalues, the more like companies and countries are going to switch to Bitcoin as like the kind of default store of value and reserve, and that's just going to create this wild like flywheel of adoption. So like I don't know that will ever play out, but I at least admit that it's possible that Bitcoin can become, kind of like an eventual reserve currency. But happening in 90 days and for Bitcoin to reach $1 million, by the end of Q2. No,
it's like the hyper bull case for Bitcoin over the next 5 or 10 years that he thinks is going to happen the next 90 days. That sounds like.
Yeah, exactly. And so, like, I mean, there's not systemic, collapse it's imminent in my mind. I mean, the financial system is certainly in a very vulnerable space, but in my mind there's nothing to kind of justify the extreme moves in both the dollar and Bitcoin that Balaji is calling for. So it's kind of interesting, and he has a fair amount of credibility. Like you said, he's a
lot of credibility.
He also like called COVID almost exactly right back in 2020 of like what was going to happen with like pushing, vaccines and, like some of like the vaccine passport and masks and all that kind of stuff. So, he's been right on some of this stuff in the past. And so, it's if it was just some random yoo-hoo out there, we wouldn't even be talking about this, but he's at least got some credibility to
Yeah, he's got a lot of credibility, but I think he's off the rails on this one. And, I already had some pink flags from some of the hyperbole, things he's discussed in the past, some of the interviews I've heard him on, like Tim Ferriss and some others. And, he's very smart, a lot of smart ideas. He's right on a lot of things, but he also is a little overconfident on certain things that I've noticed that I've been suspicious of. And this seems to be one of those things playing out, very publicly at least. So anyway, highly respected guy, definitely worth listening to, but just, always be skeptical of the people that sound really good when they're talking. I think, there's the people that sound really good. They can be very convincing, but they can be very wrong in some key things potentially. So.
Yeah, there are just a couple times I was listening to his podcast. I'm like, oh yeah, I agree with this. I agree with this. I agree with this. And then he like gets to the conclusion, and I was like, that is a logical leap that just doesn't make any sense. And so, I think it's really important to kind of not just glob onto the conclusion, but to kind of think through the thesis and think where you think it might be right or wrong.
Yeah. So, all right. What's Tesla, as we're talking, it's a really good day for Tesla. I mean, it's reaching new highs, 195.75. So we're back close to $200 territory. I mean, what's the big deal with Tesla right now? I mean, it's it seems like we had great weekly insurance registration numbers. And by the way, everyone who has questions, feel free to put their questions in the YouTube chat. That we have several hundred people on YouTube channel, and if you're on Twitter Spaces, then just reply in the Twitter thread with a question. We have Alec behind the scenes tracking some questions we'll get to in a little bit. But for Tesla, we'll move on to talk about Tesla here. The insurance registrations, a new weekly high since like last year. They haven't had this kind of high in a while. It's like this March could be a
This
record
quarter.
March.
Yeah.
Yeah.
Yeah. So it was 18,000 registrations this week. It was 17,000 last week, which was a really good number. I think the last couple weeks before that, they'd been in the, like 10 to 11,000 range. So a really significant uptick in the fact that it's been at least sustained now for a second week is really good news. So yeah, I mean, that was something we've been talking about for a long time, that, the China numbers just looked relatively weak. And we were saying a while ago that they seem to conflict with what Tom Zhu said at Investor Day, that they've got way more orders than they can, well, not way more, but more orders than they can produce out of the Shanghai facility. So, I think we're getting more and more reasons to believe that, Tom's view was obviously correct. And so could be shaping up for a pretty strong quarter, stronger than maybe we were even expecting in terms of deliveries. Yeah. So the push seems to be real. I have seen inventory numbers in the US seem to be increasing, but that's kind of what you would expect as we approach the end of a quarter. And you've got the delivery wave. It's not the crazy delivery wave it used to be, but it still will always make sense to kind of focus somewhat more in the third month of the quarter on local deliveries. And so that's what we're seeing both in China and in the US. But European inventories are kind of steadily decreasing. And I would not be surprised if we have a really strong kind of push both in the US and China in this last, week and a half or so of the month.
Yeah. I mean, on one hand, Tesla's always, I feel like every quarter they try to reiterate, we're not going to do the end of quarter push anymore. But here we are again, end of quarter, last few weeks. There's certainly a big push, a record push in China and Europe, apparently. So what's up with that? What do you think? I mean, why can't they get out of this quarterly push? Like, I mean, I see Farzad in the comments. Farzad, I know you probably have some ideas there, but working there in the past, how you doing, Farzad? We'll talk. Get to your question. That's a good question about the Ford Explorer EV. But why can't they get out of this end of quarter push? What's keeping them at it when they keep every other quarter they vocally say we're not going to be doing that anymore, we're not going to be doing that, and it seemed like the third or fourth quarter they tried to limit it, but here we are again.
Yeah. So I think getting rid of the end of quarter push, it's a matter of magnitude. It's not like they're gonna like have completely equal distribution of like vehicles to all geographies on like a constant basis. And even in the last couple of quarters, like we saw a little bit of a push, but when you look at the overall results, there was a huge inventory build over the last 2 quarters, which is what you would expect if they're kind of deprioritizing the maximum end of quarter push to get as many possible deliveries out at the end of the quarter as you can. So, what I think they're doing, and this is kind of what they were talking about in Q3, or maybe it was even Q2 of last year, where Elon said, we're going to prioritize minimizing costs. So like not paying for expedited logistics or, very expensive freight to hit a certain delivery number, and not working like extreme overtime the last, 10 days of a quarter in order to get every single possible car off the line and into customer hands as you can. So I think what they're doing is like, it still makes sense, I think, to take your first month and a half of, Shanghai production and ship that to Europe, and to have like the remaining production be more focused on the local economy. To me, that just makes sense. Otherwise, you're going to have like a huge disruption and kind of a huge miss in one quarter. But you do that in such a way where you're not like trying to jam as many possible and paying extreme costs in order to do that. You're trying to minimize your delivery costs. So I think it is just they're tampering down on the costs associated with doing that, more so than they're not going to prioritize longer distances early in the quarter and shorter distances at the end of the quarter. But I don't know. What do you think, Emmet?
Yeah, I mean, I think, well, Farzad is saying old habits die hard. They can't help themselves. I think it'll take time to really eliminate the push 100%. It'll be a 69% push versus previous quarters and going back over time. He also said Q4 2021, they didn't do the end of quarter delivery wave, and it blew everyone's mind. I have to think back to Q4 2021, what the numbers were. But yeah, I mean, I think you're right. Old habits die hard. That seems to sum it up right there. It's just like they have a whole process in place they've had for years, literally years, of how they do things. And to get the whole company 100,000 plus employees. I don't know what percentage of those are involved in logistics and deliveries and customer service orientation to new cars, it's large. But to get that whole infrastructure, that whole employee base, that whole, Tesla has like its own legacy system of doing things now because it's been
Yeah.
around for 15, 20 years delivering 10 years delivering Model S's at least, 7 years now delivering Model 3s. So to get rid of that kind of legacy systematic way of doing things and replace it with like, okay, now we're going to do it, that's probably very hard to do. So
Yeah.
they probably aspirationally want to do it, but it's probably a Herculean task internally within Tesla to make that actually happen. And maybe that's just not their top priority right now. Maybe they're just going to continue to have these end of quarter delivery waves. And I know there was in China, there was like discussion. I think it was like Troy Teslike was the one speculated on this that I saw it from, that, there's only a certain amount of chips that can actually come in and out of the Shanghai port. But didn't they talk about that in the investor day, that it's not a problem? They can get more shit. I don't know. I feel like there was some recent interview or content I saw. I thought it was investor day. It might've been something shortly around thereafter, but I thought there was reference that like, we'll just have more ships if we need to out of Shanghai because we're going to have another factory there or something like that. Right.
So I don't recall that last part of it, but I know they definitely did say that like the shipping constraints were an issue. But I think he was saying that, Zach was saying that in the context of like spreading your deliveries out a little bit more is a way to kind of alleviate that issue. So yeah, it's definitely, like an issue, but I think at the same time, like last year in particular, they were kind of getting squeezed on commodity prices and margins, were especially in Q3 and Q4, I think were lower than people were expecting, at least that the bulls were expecting. So, I think they were kind of looking at, estimates for earnings and kind of seeing that, they're probably not gonna hit those numbers. And so I think with all the cost pressure that they were seeing, from all the commodity inflation and like wage inflation and everything else, they were probably thinking they need to really focus on, the like logistics cost. Cause that's a pretty significant portion of the overall cost of the vehicle. So if you can get that down from, I don't know, say 2,000 to 1,000 just by not expediting things, that's very meaningful margin impact.
Yeah. I see Moon in the YouTube comments saying first it was chips, now it's ships. Kind of funny.
Good comment. I like that.
Yeah, and Brian Wang, who we've interviewed in the past, who's really futuristic thinking and studies Tesla very closely, as close as anyone I know. Probably more bullish than anyone I know as well. So, but studies him closely. He says there are other ports a few hundred miles away from the Shanghai port, so he doesn't get the congestion concern either. So yeah, if there's other ports they can go to, and they have to use trucks to get them there a couple hundred miles away, it's not the end of the world, not a huge deal, I guess, right? So
yeah.
And we talked to sorry, go on, Matt.
I was just gonna say, like, with that Troy thing, I love the work that Troy does, but sometimes he makes these assertions of, something like the ship constraints as like a fact, and I'm like, that might be a fact, but like, where are you getting the data from? And so
just because they've never done it before, he thought it was like a constraint. Doesn't mean it's a constraint though. Yeah.
So you and I like to think kind of probabilistically, and it's like, oh, what would it take to get more ships in there? And sometimes he comes in with these kind of very black and white statements that are kind of hard to read. Is this actually a fact, or is this just kind of your view? And it's hard to distinguish between those sometimes.
Yeah, I mean, there's not just him. There's a lot of people that seem to be thinking that the ship constraint was real, and that for that reason they can't do the delivery wave in China and keep growing, or out of China and keep growing, because they simply can't export any more cars out of China than they already have been, per quarter, to keep that delivery wave going. So and another concern we've had is like just China economy in general. Like, these latest weekly insurance numbers that we've been getting that are records, above expectations. It's good news because we've all been concerned about the Chinese economy. And we talked to our source on the ground in mainland China that February was a little weaker because it was the first month in, first holiday in a few years
festival
where everyone,
in 3 years,
festival that everyone could travel back home. So there was less people actually going to showrooms and buying cars and taking delivery of cars than normal. And so it seems to be playing out with insurance numbers bouncing back for March. But we also just got to, talk to him briefly, or got another update. And The Chinese economy, he thinks that the Chinese government, the attitude is really improving towards kind of hard tech. Like we make the distinction between soft technology and hard technology, like digital stuff, software stuff, versus like building chips or building cars, and he's basically saying the Chinese government is really trying to position, with some recent policy changes, and even at the local levels, you see a lot of subsidies coming in for EVs, like all over the place at the local levels in China right now. Maybe there's not a national CCP and subsidy like there used to be, but locally it's being made up for. But he's seeing like a trend in the Chinese government policy making right now that they're really trying to put a focus on hard technology now and take the focus off of soft technology, so that the EV industry, he thinks that's very positive for the EV industry in China. So that's a good sign if that's true. Yeah.
Yeah, I mean, it's, especially in the wake of some of the news that we've seen recently, with BYD being reported to be bringing a lot of their production down to just 3 days a week at several plants. That's a rumor that was going around just yesterday. And obviously, anyone who's tracking the kind of overall EV market in China is aware that it's been very, very soft this quarter. And economic weakness is very real. But what this source on the ground is saying is that the government is very well aware of that fact, and their point of view is the Baidus and TikToks of the world are much less important to China's long-term prosperity than their EV manufacturers in hard tech, like you said. So it seems, at least this one source is essentially saying that he believes that there's going to be a kind of policy pivot which will ensure the continued growth and prosperity of these EV companies, Tesla included, because that's more of a priority than the kind of soft tech businesses. So that could be very good news going forward too. And I think it's important to keep in mind, I mean, even if we're talking about like maybe 430,000 deliveries, and that's not that great when you compare to Q4 and maybe what we were expecting a year ago. But you did have pretty meaningful shutdown and demand issues just with Chinese New Year and then the Spring Festival, which are not going to repeat in Q2. And so if we don't have a COVID shutdown again in Q2, we might finally be the first, Q2 or really just quarter in general in a long time where we've got like really meaningful increase in like Fremont and Shanghai running at full production, and Berlin and Austin continuing to ramp. We might be on the verge of some pretty meaningful growth in production right now. So it's pretty exciting.
Yeah, exciting. So Tesla China, that should be at the top of everyone's mind. We try to talk about it whenever we have information about that, because China is quickly becoming the biggest economy in the world. If it's not already, I think it already is. Maybe, I don't know, but it's going to be the biggest EV consumer in the world very shortly. If it already, it already is. It already is by a long shot, but it's going to continue to be the bigger and bigger one. And Tesla China, I think, will be the biggest. It has potential to be bigger than anywhere else for Tesla if it isn't already. I mean, it just seems like, why wouldn't you talk about everything related to Tesla China? We talk about Tesla in the US like crazy, and that's because we're located in the US. We have tons of news and information about the Tesla in the US, but we should be spending as much equivalent amount of time on Tesla China specifics, so whatever information or signal we can come across for Tesla China, we will certainly try to bring it up as we can.
Yep.
So full self-driving beta 11, it seems like everyone's gotten it except me and you, Matt, but everyone loves it. Everyone loves it so far. It's exciting. As I can't wait to get it and start using it, because I got my 5 strikes on my Model S. So I think when you get the new version, you get reset. So I can start using my FSD beta again on my Model S.
Oh, I didn't know that.
Yeah. I've been using, because on like a long 3-hour drive, I end up like, I put it on autopilot on the highway or whatever, and probably on average every like 20 minutes I'll get like a little dink, like ding 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 ding, like, oh gosh, I looked up to the screen, or I looked at my phone for a second on autopilot to see who texted me, things you're not really supposed to do, but it like the camera detects you like pretty quickly and easily, especially if I'm not wearing sunglasses, which I haven't been a lot lately. So normally I can get any drive with like just 1 or 2 dings, worst case, if any. But in the last couple of months, I had like a few 3 or 4 hour drives, like to go somewhere in the South Bay or whatever, and I'd be on the highway a lot of the time, and then I ended up, before I knew it, having 5 dings, and it's like, oh, you got too many dings for this drive. Keys, I'm like, crap, and I already had like 3 strikes, and so I
Oh,
got like
geez.
my other 2 strikes in the last couple months, and it just I was unfortunate. So
Yeah,
hopefully I'll be
I actually
reset
haven't gotten
soon.
a strike yet. Although the Mr. Green guy's got 2 strikes on my car, so if I get in trouble, I'm going to blame them.
Well, it's supposed to reset when you get it. If anyone in the
Yeah,
comments
it should
knows
be
the rule
fine.
on that, I think it's, if anyone's gotten it, I think you get it reset. Farzad says he doesn't have the new version either. So, okay, we're not alone. Maybe just some of us, they haven't decided we're not safe enough to give us the new FSD 11 yet.
Farzad also
But
says he's sick of looking at my stupid face in high definition. So yeah, maybe I should switch my internet back for the good of everyone.
yeah, yeah. Um, so I mean, it seems like it's a step change. It's like we were afraid that it'd be like one step back for the new
Yeah,
stack, the single stack, and then we'd have, it'd start iterating from there. But it seems like it's a step forward, and a new stack infrastructure or architecture that they can build off of to iterate faster from here. So I'm very bullish. I mean, this is the most bullish I've been on FSD beta since the very beginning, I feel like, right? Or there was like one
yeah,
step change. There was, maybe 6 months in or a year in watching the videos where I felt like it made a big improvement. But this seems to be a big improvement from watching a lot of videos, Chuck Cook's videos, Dirty Tesla's video. I've seen a few different
yeah,
videos I've been watching, and even people that have been skeptical. Um, so this could be the beginnings of a higher adoption rate later this year in FSD beta, and that's a huge, you know, uh, plus for the stock price and margins. It could
yeah.
discount. It'll discount the margins they you know took hits on by lowering prices without advertising, for example.
Yeah. Yeah, and I mean, if that happens, I mean, that has massive transformational power for Tesla's financials. And this is something that we've been watching for a while. Obviously, the FSD beta rollouts have been a lot slower than we would have expected, 2 or 3 years ago. But the issues are real, and I think the worst thing that Tesla could have done is to roll it out too aggressively and then get in an accident, or God forbid somebody dies, and then the Dano Dowds of the world are just trying to get it canceled, and they've got
Yeah.
more rationale behind that. So I think it's really good that they're really kind of tightly limiting the rollout of it as much as they have so far. But when I'm going to get incredibly like bullish, I'm going to like probably be on the edge of my seat, is whenever they feel confident enough to do like a free trial to people, because it is a little bit of a learning curve. I mean, the
Hmm.
behavior, it's hard to predict. At least when I first got it, it was like, what is it doing right now? And you don't know
Yeah.
exactly when you can trust it and when you can't. And it's like, I could see if somebody gets that and they just assume that it's going to act perfectly and it doesn't, then that could be a situation where you get more accidents. So, but I think the system, it never, like, I used maybe a year and a half ago, it would somewhat routinely, at least for me, put me in situations that were a safety risk if I didn't intervene, and that just doesn't happen anymore. So I shouldn't say never, but it's very unusual when that does happen. So
Hmm.
when it gets to the point where that's very widely applicable across the whole fleet, where maybe the only issues are it's acting a little bit like a jerk or going too slow. That's still safe enough to roll out to more people, and so when they get to the point where they can do that, and people get a taste for it, then I think you're going to have a huge change in, maybe not a huge change, but a notable change in kind of take rate, which will be really beneficial for financials.
Yeah, absolutely. Um, So deliveries, we think, I guess the consensus is around 420,000, 430,000, somewhere in
Yep.
that range. We still got another week or so left, 10 days left of the quarter here. So more information to come, but are you with consensus, or are you higher or lower? What's your speculation, Matt? And then people in the crowd, next week we'll try to, even though we don't have the final number, we'll have a more clear estimate of what we think that, the crowd that follows us has, and maybe we can do a preview of what earnings might be for the quarter with that estimate in mind. So what's your kind of predictive estimate here, Matt?
Yeah, I think last week when we were talking about this, or maybe it was 2 weeks ago, I was thinking maybe 425, and I think you were at 430. Based on what I'm seeing so far, I'm probably more in the 430 camp now. But it wouldn't surprise me. Like I would say I don't know, 75% confidence interval is maybe 415 to 445, something like that.
Mm. Yeah, mine is my 75% confidence interval is 420 to 445.
Okay. All right. So we're
So
pretty close there.
pretty close. So 435 is my median, maybe something like that. I don't know, or 432 or whatever. I don't know. So we'll see what people in the comments. I see D Murik says 420. Yeah, so we'll see. We'll look at the comments later, and people who watch this after the fact can put in the comments on YouTube. We'll look. Martin Muldoon says 440. So we'll just kind of try to figure out what the average or the mean is for most people that are not, complete outliers. Like anyone that says like 500,000 or 350, we'll just take that out of the data. But everyone else will try to put into like a little bell curve and figure out what the average is, and maybe do just an earnings preview next week on that. And with that, let's get to questions. I guess we have maybe 15 minutes for questions here. Is there anything else you want to touch on before we go to questions, Matt?
No, I don't think so. I think we touched on pretty much everything. So yeah, Tesla stock 496 now. It's looking good. So let's go to
Yeah.
Q&A.
Okay. First question on Twitter is Tesla Uber Ride says 2009 cash for clunkers destroyed 677,000 cars, resulting in years of inflated used car prices.
I remember
Pandemic
that.
disruptions. Yeah, I remember hearing that policy. Yeah. It was before I followed Tesla, so I wasn't like that into what's going
I
on in the
I
economy
was
there.
working for GM at that time, so I was very
Oh, you
acutely
knew
aware
about
of
it. Okay, so you
it.
could be the best commenter. So I'll read the rest of the question. It says pandemic disruptions canceled production of 16 million cars globally. Should the stock market price in sustained inflated new car prices? What do you think,
Yeah, I
Matt?
mean, so sustained, I guess, is the question there. You certainly did see a huge increase in new car prices in 2022 that I was certainly not expecting. I don't think you were either, Emmett.
Mm-mm.
I had in my model that Tesla would decrease prices across the board 5% a year. And instead they raised them. I forget what it was, 10% on average, something like that, maybe a little bit more.
Mm-hmm.
So yeah, that was certainly the pandemic disruptions on both on the supply side, but then also on the kind of demand side with consumers getting all the stimulus money, the stimmy checks as they were called. Consumers were just feeling very wealthy, and so they were buying a lot of cars. So you had kind of this weird situation where the supply was constrained and demand was kind of artificially inflated higher. I think what we've seen so far, in the last 12 months or so ish, maybe more like 6 months, is that we're kind of finding some new balance where supply is normalized, normalizing, if not 100% normalized, and then demand is it's not necessarily drying up, but the kind of artificial demand is increasing. So or is being eliminated. So I kind of think where we are right now is somewhat indicative of like a sustainable new normal. Maybe one of the questions though is at least in the United States, the Inflation Reduction Act. At the end of this month, the official guidelines are going to be put out. So there's potential anyways that the $7,500 credits for all the Tesla vehicles that qualify now might not fully qualify after 3/31. So we'll have to kind of wait and see what happens there. But generally speaking, from a kind of global view, I think we're in a reasonable kind of supply and demand balance right now. I don't know. Do you have any different thoughts on that, Emmett?
No, I think that makes sense. Yeah, I agree. Yep. Next question from Jeff Fogarty on the YouTube comments. Question: does the Fed want to take over the banks? I don't think the Fed wants to do that. I think that's an interesting question. I think there's going to be two tiers of banking. The too big to fail banks and the regional community banks, and we've sort of just evolved into that. And I think they want to keep those two tiers separate but alive. I think that's the way we are right now, and So I think they're just trying to keep those two kind of models alive and doing what they can and figuring out a way to guarantee deposits. But the the consequence of doing that is that some of the smaller tier banks are going to fail from time to time, and the ones that aren't as careful with their balance sheet or a little too aggressive, or if there's a bank run for whatever reason, they might fail, like we saw with Silicon Valley Bank, or but the depositors, they want to make sure they're made whole at least, and maybe just the shareholders and bondholders of those banks, lose out. What do you think, Matt?
Yeah, I agree with you. I don't think there's necessarily, nefarious motivations here. And I think if we were talking about the SEC, I'd have a lot more worse things to say about the SEC and kind of acting in bad faith and trying to there's like regulatory creep going on in that agency. It seems very clear to me. With the Fed, I think they're more misguided, but trying to do the right thing is kind of my view.
Yeah. From Eric Williams in the YouTube comments, question: did you see Shy respond on Twitter about Chachi TP and how it was going to be a big deal for Lemonade? How do you speculate they will use it? Yeah, we had touched on that yesterday in our prep call. Actually, we didn't get to that. So yeah, that was an interesting response that Shy Winnegar, the co-founder and I think he's co-CEO of Lemonade, along with Daniel Schreiber. And someone had asked him about Chachi TP. Is it going to be used in Lemonade? He said something like in a big way, and then he said something like, their current chatbot is like a cousin of Chachi TP. So I think they're arguing almost. I think my suspicion is that Shy, if I'm in Shy's shoes, I feel like, wait, we've already been building this for Lemonade, and now OpenAI is getting all this credit for building it for just generalized everyone's use, but we have the same technology just for insurance specific Lemonade stuff that we've been building, and that's my guess of what's going on there, or what Shy is thinking. But maybe there's ways to use ChatGPT, the API or the capabilities they let corporations or companies use it for things, and maybe there's ways to combine that with the existing infrastructure they have with Maya chat bot capabilities. Any thoughts, Matt?
Yeah, I'm kind of confused about it, to be honest with you, because I mean, when they talk about AI, I mean, one part of it is clearly Maya, and they've got this other AI gym
Yeah.
that they use for kind of interacting with customers, and it's a really smart way, I think, of minimizing your overhead costs and having a great customer experience. To say, hey, I'm interested in adding auto, or I'd like a quote for home, or I need to file a claim, and it can do like 90% of the kind of mundane tasks already.
It can even do cool things like cancel your existing insurance policy once you make the new Lemonade for you, which is a great,
Yeah,
great
that
saves you a
was
phone call. Yeah.
an amazing feature. Yeah, it was like one of the things that really wowed me as a customer, is just to
Yeah.
avoid that hassle for me.
Yeah.
So I mean, that's where I'm a little bit confused. Is their existing system already works pretty well, but
Yeah.
Shy is saying they're going to use it in a big way. So I would have to imagine that means they're maybe giving up on Maya and Jim, or they're going to just get rid of like the infrastructure and use OpenAI instead. Because I mean, obviously, ChatGPT is a way more versatile than their Maya and their Jim.
From a generalized perspective, but within the
Yeah,
actual Lemonade specific insurance stuff, I'm not sure. Yeah, I don't know. Yeah.
exactly. So that's what's confusing to me, is they seem like they're doing their job really well already. So what is like what is the incremental benefit that has Shy saying they're going to use it in a big way?
Yeah.
So I'm not entirely sure how that's like great news for Lemonade, to be honest with you. It's really
Yeah.
interesting, and I'm sure that I'm missing a piece of it, because Shy is following this stuff way more closely than I am, obviously.
Yeah.
But I'm a little bit perplexed by it, to be honest.
Yeah. I'm slightly perplexed. So let's go to the next question here. From Farzad, any thoughts on Ford's Explorer announcement? So Ford just announced their new EV Explorer, or they revealed it, I guess, and for Europe, the European market. I mean, announcements to me, for all these other companies, our announcements are almost meaningless until they actually start producing and delivering them, and then when they produce and deliver them, not just a few hundred of them, like many thousands of them. Are they going to deliver 10,000 plus of them? I highly doubt it anytime soon. So I think they're like teaming up with Volkswagen and, using LG cells, which gets something from CATI. I don't know. It's just like all crazy. It's like which of these companies is actually building the car, or in the brand that's representing the car even is different than the company that's building the car, and then that's different than the company that does the battery. It's just really confusing. The marketing departments of Ford and Volkswagen, all these other are on full force, trying to confuse us with, what their, how good their next generation platform is. And then it doesn't get delivered, or it gets delivered with crazy markups, or they pause delivery, like the F-150 Lightning, which has only delivered a few trucks, and they had to pause it. And, it's just, I don't put any trust. I just, you see Teslarati, or, even people in the Tesla community, say breaking news, new model introduced by Stellantis of this EV. And how many of these have I seen for 10 plus years that are meaningless? It's just noise to me. To me, it's noise until I see, legitimate, 10,000 deliveries in a year of one of these new EV models that, people are talking about saying is a good car. It's really just noise to me. Like, I don't believe it. I don't believe it as being anything substantial. What do you think, man?
And even 10,000, it's like, I mean, let's imagine they
That's
do
still not much. That would just be enough to get on my radar. Yeah, that would be enough to be on my radar. Like, okay, maybe I'll consider that possible.
Yeah. Now the Mach-E is targeting, I think it's 250,000 units.
They're targeting, but what they do, they did like 50,000 or 30,000. So it's on my radar, but even their target number is so aspirational. I don't think they're going to get to that, but go on. Sorry.
Yeah, maybe not. But, at least it's like some of them at least have more credibility than any of them had 5 years ago, or 2 years ago for that matter. But I mean, I agree with you. The weird thing with this announcement in particular, though, is like, the Explorer is like a pretty large SUV. It's not a full size SUV, but it's like the step down from the Expedition.
Yeah.
Why introduce that in Europe? I mean, that seems like something that would be much more attractive in the US market. And then you've got the tax credit on top of that, if they were to sell it here. So it just, it seems strange that they went in Europe first. So I'm sure they've got reasons for doing so, but, I kind of agree with you. It's like, I wish them luck. I don't think it's a risk right now. But announcements are, hardly worth the paper that they're written on. There was that VW announcement of, like, some of the outlets last week were saying, oh, like they beat Tesla to the $25,000 car. I'm like, this is a 2025 launch, and like why are you giving them credit for having beat Tesla? It's just it's so mind-boggling how these things get bent out of shape.
But we're going to have our favorite bear on in a month or so for a 1-year checkup with Drew Dixon, and he's a big proponent of models, and he probably thinks like, oh, another model for Tesla. There's 20 different models being announced, and, so, I'm the opposite. I think the number of models is bogus at this point. It's so we'll see. We'll have a big discussion with him in May. I think we're scheduled to talk to him. He was one of our top interviews we've ever done. So we'll have a revisit with him about the Tesla bull bear case. I don't know if he's as much of a bear as he used to be, but he's still got a very, bearish mindset within him that he can argue very, if he wants to, really hardcore against Tesla.
He thinks Mercedes is going to be selling more EVs than Tesla in 2035. So I don't know. I think I might have a bone to pick with him, and I think he's still plenty bearish.
I mean, 2035 is so crazy to think about. That's too far. Like, people who talk about 2035, I don't even think 2030 is so hard to visualize. How can you go to 2035? I think 2027 is about as far as I can go, where I'm like comfortable somewhat saying, okay, well, by 2027, 3.5 years from now, maybe we get to that for that or whatever. So just like anything beyond that is too much of a step change of technology at this point to really have any confidence in a prediction, I think, So
yeah, that's a fair point. 2027, 2035. I want to be projecting Tesla bots in 2035, not auto units.
Yeah, that'll be cool. Yeah, that'll be cool. And Tesla 195 staying at 195. I mean, the NASDAQ is up about 1%. Okay. And Tesla is up 7%. That's a pretty big difference there. So, I mean, let's do, we'll talk about Tesla one more second, but first let's do one more question, and we'll just do a closing thoughts on Tesla and stop and end the episode. So one more question here. From Scott Kirkwood. Oh, this is what I wanted to talk about anyway. So yeah, we hadn't talked about this. Elephant in the room sort of is from Scott Kirkwood on YouTube. So is Moody's Tesla rating out of junk status going to make a difference? And this is what I wanted to touch on. I think yesterday that news, you didn't see an after hours pop in the stock price for Tesla, when we heard, that Moody's took it out of investment grade, junk, and put it in like the lowest investment grade possible, which is sort of like a slap. It's sort of like bittersweet, that Moody's and S&P have like Tesla in the lowest possible investment grade ratings. It's like, oh, finally we're investment grade. Thank you guys. But it's like so ridiculous. They're not,
Well, in
looking
contrast
at
that
their
with like
balance sheet and debt and all
Silicon
that,
Valley Bank, I think had a AA or AAA rating 2 weeks ago at this time.
Yeah.
And so
Yeah.
it's just like, to me, I was thinking the exact same thing as you, Emmett, though.
It's like a slap in the face, but it's like, here you go, Tesla. You finally get
but
your
it's like
investment
one notch
grade.
above junk. It's like
Yeah.
but there was no pop in the after hours, which I definitely would have expected last night when that news
But there
broke. And
wasn't a
so
pop in the S&P either, right? When the
yeah,
S&P did it too, right? And that's a little bit
so
more respected than Moody's, right?
right. So that kind of just got me to think that, okay, the market is smart enough at least to recognize that these, rating houses don't know what they're talking about with Tesla.
Yeah.
Um, and just a quick side note, like hats off to Alexandra Mers. I know she was kind of pushing this, just trying
Oh
to like
yeah.
get information
She's
out of
great.
S&P and Moody's, and
Yeah.
I believe she was an impetus for actually this rating increase,
Yeah. If
just
you
by
don't
poking
follow
around and
her,
asking questions.
Yeah, if you don't follow her, she's a great asset to the Tesla community. If anyone in the chat in the comments puts her name, her Twitter handle in the chat, she
At
should get a
Tesla
lot of
Boomer
follows.
Mama, I think it
Oh yeah,
is.
that's what it is. At Boomer Mama or Tesla Boomer Mama.
Tesla
Yeah,
Boomer Mama, I think. Yeah.
I follow her. She's a great asset to the community, and she has a great perspective on that stuff. So, um, I think that it made a difference in today's price movement, though. I do. I
Mhm.
think I think there are some marginal old school, whether it's mutual funds or just like private funds that have written in their kind of rules, like we're conservative, we can only invest in stocks that fit this criteria, including investment grade, and maybe it doesn't even spell out investment grade in both Moody's and S&P, but because it's so conservative, it has to be interpreted that it's investment grade in both Moody's and S&P, for example. So
Yeah.
I just think there's some pools of money on the fringe, on the margins, that now are able to buy some Tesla that have been waiting for this. And, those pools of money, those funds, private funds and mutual funds that are waiting, few and far between as they may be, you just have a few of them just marginally buying Tesla today, maybe tomorrow, maybe the next day. I don't know. Maybe they're going to start buying it, but it'll help. It's helping this Tesla stock price today, maybe the next couple of days. I don't know, but it's going to be, it's a help. It's a nice, tailwind. That's a word I use a little too much. I'm trying to think of another word for that, but it's a nice push for Tesla stock to push the momentum back in the right direction, where we're all, rooting basically for it to go up. So, and we think it should be worth a lot more in the future. So, yeah, that's my thought. That's what I think is happening to some degree today.
Yeah, I agree with you. I think you're right. I mean, there's probably not a huge, capital pool of funds that are going to add because of this movement, but I think they're on the fringes. There's a handful that
There's
it
no one
could, it,
shorting it because of this, right? There's only a couple people
right,
buying more because of this, right?
right, yeah, yeah. So no,
Yeah.
I agree with you. To me, that makes a lot of sense. But
All you
we could
need
have
is
a
someone like me or you. All you need is someone like me or you who are personal fans of Tesla, right? Or anyone who's listening to us who's a personal fan of Tesla that works in the finance space, that manages a very conservative fund, is a portfolio manager, or plays a role in a portfolio in a fund that's very conservative, and maybe that they see this happen and they can say, hey, now we can, in this fund, we can buy 1% of Tesla with our assets, which we should have
yeah,
done a long time ago. I've been waiting for this moment, and so
yeah,
now that's what I think could be happening.
yep. Yeah, no, I agree. It's probably not a huge movement, but may add a little bit of pressure to the upside. I mean, it sounds probably similar to what happened when Elon was selling those chunks. I mean, it definitely resulted in like a $10 to $20 drop when he would sell these several $1 billion chunks at a time. So the
Yeah.
same thing can happen in reverse when you've got new
Yeah.
long-term buyers coming in.
Yeah, it's funny because everyone thought the S&P, everyone was waiting for the S&P investment upgrade, right? Or Moody's, and S&P finally did their upgrade, and everyone was like, "That's the signal, like Tesla's gonna get bumped up because of this," but nothing really happened from it. and it was in the midst of Elon selling. So maybe Tesla would have gone down even more if maybe there was some incremental buying that offset some of the down movement Tesla would have otherwise had from all of Elon selling and the sentiment around the stock at that time. Who knows? But maybe, just maybe, the real signal is once both of S&P and Moody's have upgraded Tesla to investment grade, which is now starting today. Or as of yesterday after the close. So maybe that's the real signal we should have been waiting for. And maybe the next few days, Tesla goes up $10 a day for a few days, even while but there's so much noise with the Fed decision tomorrow and all that. Maybe we'll never even know. Maybe Tesla will just look like a hyper responder to a bull market or something, So anyway.
Yeah, tomorrow's gonna be wild. 2 o'clock, the decision comes out. Powell speaks at 2:30. Should be a very volatile afternoon tomorrow.
I know. I do not envy Powell's shoes. Like, he's got the whole old guard. Farzad, I love Farzad. He put out an interesting survey on Twitter a few weeks back, or a few days ago, saying, like, do you guys what do you think about the Fed's knowledge of what's going on with the economy? And it was like, they have no idea. They know a little bit about what's going on, or they're like they're idiots completely or something. And everyone's voting like they're idiots completely. And I put, like, they somewhat know what's going on, because I do think that they're knowledgeable. They're just like an old guard, and everyone over the age of 50, let's say, or 45 or 50, I feel like is almost all those people are part of the old guard, just by the nature of remembering what everything was like before the crisis. And interest rates, most of their life was with interest rates 5% plus or whatever. So I think the Fed is in that, they have so much they have to pay attention to with the old guard, and they're just caught between a rock and a hard place in a lot of ways, and they try to do the best they can. They should definitely lower rates. We think that, and maybe even Powell, knows the case to be made for that. But the old guard in him says, like, no, interest rates are supposed to be, 3-5% plus anyway, or whatever. So, but I hope tomorrow that they at least pause, if not lower rates, because going up so fast. Kathy Wood argues historically this is a record of how, like, just going up 4 or 5% in 12 or 18 months in rates. That by itself isn't the travesty. The travesty is that interest rates have gone up, like, from 0.25%, almost zero, to go up 20 times to like 5%. 5% from 0.25 to 5%. That's 20 times, like a 2,000% increase in what the rates were. That's the travesty. That's what the problem is. And I have to agree that's, you have to put weigh that in your mind if you're the Fed at this point, and think about that consequence that's going on right now with the banks. So I'm not, I don't envy being in their position, because no one's going to be happy with whatever they do. If they don't raise rates, that old guard is going to be yelling at them like, you're an idiot, blah, blah, blah. Inflation's out of control. You should be raising rates still, and if they do, if they do raise rates and satisfy the old guard, then everyone like us, and who kind of thinks we really know what's going on, is going to be like, you're an idiot, blah, 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 blah. So they're not going to win no matter what. They just have to preserve their legacy as best they can.
Yeah, no, I completely agree with that. It's not not an enviable position he's in, for sure. But I think the long-term good thing for the economy would be if he, either stops or signals a lowering coming soon. And that's certainly what the market is expecting. That there will be a reversal at some point by the end of the year. That would certainly be good news for for the market.
Yeah, absolutely. All right, guys, we'll leave it there, and we'll be back next week, same time, same place, on YouTube Live, and we do it on Twitter Spaces at the same time. So we'll see you next week.